Zillow is in the headlines again. The internet is claiming that the CEO just lost it after a billion-dollar market crash. But here's the truth. Those viral videos are misleading. So what really happened? Stick around. Because the real story is shocking, but not in the way you've been told. Hey everyone, welcome back. Today we're breaking down one of the most viral stories online about Zillow. You've probably seen headlines saying that Zillow lost $1 billion overnight and that the CEO had a full meltdown. That sounds dramatic, right? But, like most viral content, there's more to the story than what meets the eye. We're going to cover Zillow's actual financial situation, why the housing market is slowing, what the viral videos are really showing, and what this all means for investors, buyers, and anyone following real estate news. By the end, you'll know what's hype and what's real. Let's start with the viral videos. Titles like Zillow CEO loses it after $1 billion loss are everywhere. If you clicked on one of these, you might expect to see dramatic footage of the CEO screaming or throwing papers. The truth is, no verified news outlet has reported any of that. Zillow did not announce a sudden $1 billion loss today. These videos are classic clickbait. They're designed to grab attention and get people to click. The creators know that if they say billion-dollar loss and CEO meltdown, viewers will be curious enough to watch the video. Viral content often exaggerates reality. This is not unique to Zillow. Many large companies are misrepresented online, especially in finance and tech. So what's really happening with Zillow? Zillow has experienced ups and downs over the years. Their iBuying program, where Zillow buys homes, renovates them, and sells them, caused significant losses in the past. Some of these investments didn't turn a profit, and over time, Zillow's market value dropped by billions. But this wasn't a sudden one-day event. These losses were gradual over months and years as the company adjusted its strategy. That's very different from the viral claim of a billion-dollar crash in one day. Today, Zillow makes money from other areas, like rentals and mortgage services. In recent quarters, Zillow's revenue actually exceeded expectations. They're also investing heavily in technology to help buyers and renters, which could grow the business in the future. Even with challenges, Zillow is far from collapsing. The story here is about a company adapting to market changes, not a sudden catastrophic failure. Now let's look at the broader U.S. housing market. More than half of U.S. homes have fallen in value over the past year. Cities like Denver, Austin, Phoenix, and Sacramento have seen significant declines. California alone lost over $100 billion in total housing market value. Why is this happening? First, mortgage rates are higher now than they were a few years ago. Borrowing costs have increased, making it harder for buyers to afford homes. Second, inflation and slower wage growth mean people have less disposable income to spend on housing. Third, after the rapid price increases during the pandemic, a slowdown was expected. This is called a market correction. It's normal for real estate prices to rise and fall over time. This is very different from a crash like 2008. Some cities are still stable, and a few are even seeing growth. The market is uneven, which makes research and caution important for buyers and investors. You can see this in neighborhoods with empty homes and for sale signs that stay in front of properties for months. These signs are a clear indicator of a slowing market. Zillow also faces challenges beyond the housing market. The company is dealing with legal challenges and increased competition. Some lawsuits involve claims about copyrighted content, which could cost the company money. At the same time, competitors like Google are experimenting with real estate listings directly in search results, potentially drawing traffic away from Zillow. To respond, Zillow is diversifying its revenue. They're investing in rentals, mortgage services, and technology to provide tools for buyers, renters, and investors. This strategy is smart, but requires adjustment. It's normal for companies to go through periods of restructuring or strategy shifts. It doesn't mean the company is collapsing. It's crucial to separate the hype from reality. Zillow did not lose $1 billion today. The CEO did not have a public meltdown. Housing prices are falling in many areas, Zillow faces competition, and there are legal challenges. But the company still has profitable business segments, and it is actively adapting. The lesson here is simple. Don't believe everything online. Viral videos exaggerate events to get attention. Always check verified sources and understand the context. For large companies like Zillow, context is everything. Looking ahead, it's important to watch several factors: housing prices and trends in key cities, Zillow's ongoing legal cases, competition from other tech and real estate companies, and Zillow's investment in technology and services. Even with challenges, Zillow remains a major player in U.S. real estate. For buyers, investors, and renters, understanding the full picture is more important than reacting to viral headlines. To recap, the viral headlines about Zillow are misleading. The real story is about a company facing normal business pressures, a cooling housing market, and increased competition. There's no need to panic. The housing market is adjusting, and Zillow is adapting along with it. Always check real news sources before believing sensational headlines. Stay informed, stay cautious, and stay updated on the real story behind major companies and market trends. Thanks for watching, and stay tuned for more updates on trending financial stories.